All right, today we're going to do something a little different. We are cracking open a technical report for a stock called Quantum Computing Inc. You might know it as QUBT. And we are going to solve a really fascinating puzzle. And this right here, this is the whole mystery. You've got a stock that's just been on an absolute tear, but its official technical signal is basically saying, hey, pump the brakes. So, what's the deal? What's going on here?
Okay, first things first, let's set the stage. Just how high has this stock been flying?
I mean, just look at this trajectory. In just a few short weeks, from mid-September to early October, the stock absolutely surged. We're not talking about a gentle climb here, that's a full-on blast-off. And this is exactly where our investigation begins. You have this incredibly powerful, strong trend, but it's being met with an official signal that just screams uncertainty. So let's put on our detective hats and start piecing together the evidence. All right, let's start with the first set of clues. What's all the evidence that supports this massive bull run? What's the case for up? So here's our number, $24.62. This is our anchor point. You could almost call it the scene of the crime, if you will. Now, what's really important about this price isn't just the number itself. It's where it's sitting. It is floating way, way above its historical average price, which in the trading world is a classic sign of strength. And this table really puts it into perspective. Look at that. The current price is over $24, and it's just crushing both its 50-day and 200-day averages. I mean, they're down at $16 and $12. When a stock trades this far above its own history, analysts see that as a very, very bullish signal. But the positive clues, they don't stop there. The ADX indicator, which measures how strong a trend is, it's high. The MACD, which is a momentum gauge, it's positive. And the on-balance volume, well, that's just a technical way of saying a lot of people are buying this thing enthusiastically. The case for up looks pretty rock solid. But you know, if it was that simple, we wouldn't be here, right? This is where the plot really thickens. Now we have to look at the conflicting evidence, the warning signs that are flashing on the dashboard. Before we get into the data, we need to understand this key concept, overbought. It sounds complicated, but it's a really simple idea. It just means a stock has gone up so far, so fast, that it might be running out of steam. I love this analogy. Think of a car's engine running in the red zone. Yeah, it's performing at its absolute peak, but it can't stay there forever without cooling down. And this slide, wow, this puts the entire contradiction in plain sight. On the left, you've got all those bullish momentum indicators we just saw, but on the right, you have a whole suite of other tools like the RSI, the CCI, Bollinger Bands, and they are all screaming that this stock is in overbought territory. You know, the report itself highlights this tension perfectly with this one quote. The stock's current sprint, it's an outlier. It's running much, much faster than its usual pace, and that is exactly what's making all those technical indicators start flashing a warning. So, you've got these two powerful forces pulling in completely opposite directions. The outcome? Well, it's going to be decided on what we can call the price battleground. Let's look at the key levels that traders are watching right now. Now, to understand this battleground, we just need two final concepts, support and resistance. It's super easy. Think of support as a price floor that the stock has trouble falling through, and resistance is like a price ceiling it has trouble breaking above. This chart lays out the battlefield perfectly. Here's our current price, $24.62, caught right in the middle. Below it, you've got the support floor at $21.21, and above it, there's that resistance ceiling at $25.84. The stock's next move really depends on which one of these levels breaks first. Okay, we've reviewed the bullish evidence, we've seen the cautionary warnings, and we've mapped out the battle lines. So let's get to the verdict. What do all these clues tell us might happen next? Well, based on all the evidence, it really boils down to two distinct possibilities. In the bullish scenario, the price just smashes through that ceiling at $25.84, which could signal that this rocket ship has even more fuel. In the bearish scenario, it drops through that floor at $21.21, signaling that it's time for that cool down we talked about. And all of this brings us full circle, right back to that central question we started with. If those are the two most likely outcomes, why isn't the signal buy or sell? Why this confusing neutral low confidence rating? And here's the crucial point. The signal is neutral precisely because the evidence is so contradictory. The analysis isn't trying to predict the future. It's actually doing something more honest. It's highlighting the intense uncertainty of a stock that's caught between a powerful uptrend and some very serious overbought warnings. It's a classic tug of war. And this takeaway from the report really seals the deal. It suggests that a pause, or even a slight drop, isn't necessarily a failure. It could actually be a healthy and necessary step for the stock to just catch its breath before it potentially attempts its next big move. And that leaves us with a much bigger question, one that goes way beyond just this one stock. When you're looking at any investment, how do you balance the sheer excitement of strong momentum with those flashing warning signs that things might be getting too hot, too fast? That's the real puzzle every investor has to solve.